Bianca Botes from Peregrine Treasury Solutions joins us now for a wrap of economic news that happened this week. The biggest news, I think, for me was the US not exempting us from those tariffs, those expensive tariffs. How could that likely affect some of our steel industries?
So, unfortunately, the reason behind Donald Trump's decision not to exempt South Africa remains questionable. South Africa is actually a minority exporter to the US in terms of steel, but the impact it can have on the South African economy and the employment figures within that sector is still to be determined. However, it is expected to impact the industry quite negatively.
We saw some PMI data also coming out with ABSA saying it's still above the 50-point level, and Standard Bank as well, although experiencing a drop, still above the 50-point mark. So that's really good in terms of manufacturing and the factory gates.
Yes, so basically the 50-point mark indicates that there is manufacturing activity taking place in South Africa. When we start dropping below 50%, we can start raising a bit of concern regarding that. Currently, even though it is contracting, it shows that there is manufacturing stimuli. We are actually looking at increasing manufacturing in South Africa, especially under the reign of President Cyril Ramaphosa. And with the rand actually weakening slightly, that will be positive for exports as well.
Let's speak about that rand and how it's actually still volatile as it's known to be, but it's actually the dollar weakness that's been driving that strength and not so much the Ramaphoria as the market had predicted.
Absolutely. So obviously the rand was underwritten by a lot of Ramaphoria that came through, so that sentiment that drew through from that definitely contributed. However, one cannot ignore the global elements, especially what has been happening in the States. In recent months, we've seen them being stuck in turmoil with regards to a lot of tension between them and North Korea, Syria conflict, Russia. And now we're actually seeing those bond yields tick up in the US, and we're seeing a lot of sell-off of emerging market assets. And that has actually put quite a bit of pressure on South Africa, especially in an environment where there's not a lot of political backing at the moment that can drive the rand stronger.
And what's been your view of the market since President Cyril Ramaphosa took over? He's had about 3 months now to run the country per se, and how has the market moved as expected?
Markets has actually been very quiet. It's been less turmoil than we've seen over the past 2-3 years. However, it is still very politically driven. Every time we have some big data coming out in South Africa, it's actually overshadowed by what is happening on the ground in terms of protests. The recent weakness in the rand we've seen is actually dollar strength that's come through. And surprisingly today, it drew back quite significantly. We're trading at about 12.46 at the moment. Earlier during yesterday's trade, we traded at 12.72. So it's quite a nice drop in the currency there. However, we need to focus on what South Africa is going to do to actually improve economic growth and maintain sentiment. Because even though we're seeing figures like consumer confidence improving in terms of the new total vehicle sales, there's still a lot of groundwork to be done in order to transform the economies on a structural level that is actually maintainable and sustainable moving forward.
We've seen efforts in terms of that investment drive that's come through from the president, and some of the things that he's tried to pull in terms of government and cleaning out those that were perceived to be wrongdoers in government. Do you think that will be enough for investors, first of all, and those rating us?
So if we look at what happened in April, just during the course of April, South Africa is actually one of the emerging market currencies that took the hardest beating on the back of the dollar strength. Following subsequent articles, especially in the media, saying that South Africa has actually been put on the back burner in terms of obtaining foreign direct investment, and a lot of that relates to policy uncertainty within the ANC. Currently, it seems as though a very fine line is being tread by the president in terms of satisfying the country versus satisfying the party, and that is something that we need to get clarity on. Exactly what are the policies that we are going to be implementing, and whether those policies are going to be pro-economic growth or whether those policies are actually going to be pro-populist movements.
When we look on further next week into manufacturing and mining data that comes out, and obviously that will speak a lot to growth, what are some of the expected numbers that you're looking forward to there?
We're looking to see a slight decline in both manufacturing and mining data, merely because of the nationwide strike that's been taking place. That has a significant impact on mining production, obviously, and especially with the wage dilemma that's currently taking place in South Africa. Currently the minimum wage is set as 3,500 per month, while Labour parties are looking to actually get 12,500 rand as a living wage.
Are we looking at a drop in the growth number then in the second quarter?
Economic growth, I think, will still remain quite subdued this year. Last year, we actually saw it coming out at 1.3%, but that was basically being boosted by agriculture coming off a very low base that contributed to 36% growth in that figure. I think this year we can aim to see about 1 to 1.5% at most.
All right, thank you very much for that wrap. That was Bianca Botes from Peregrine Treasury.